Hello friends, welcome to today's session. In continuation of our learning about interest on drawings, we are going to learn how to calculate interest on drawings when the drawings are irregular. So let's start. Now first as a recap, let us just recap what is drawings. Drawings are nothing but withdrawals by the partner for personal use. So we are segregating the firm and the partner and treating the business as a separate entity. So whatever is being withdrawn for the personal use, we call it as drawings. Now basically there are two types of drawings that you will encounter. One which is out of capital and the other one is out of profits. Now this interest on drawings that we are learning the computation, it is on this particular type of drawing, that is drawings out of profit. So we calculate interest on drawings which is made out of profit. If it is given that drawings out of capital was rupees so and so, please ignore that. You're not supposed to calculate interest on drawings and on that amount. If they're given drawings just like that without saying it is out of capital or out of profit, then you understand that it is out of profit and you can calculate interest on drawings at the rate specified. Now this interest on drawings is charged by the firm. So it is going to be the income for the firm, whereas it is being collected therefore from the partner. So it is going to be debited to their capital account of the partner. So therefore the journal entry that we would pass would be interest on capital account debit to interest on drawings account in the books of the firm, because it is income for the firm. It is credited here at whatever rate specified. Now having understood this, now let us go into the actual computation. Please note down this question. We will solve this question in both. Now this drawings out of profit also can be of two types. One when there is an irregular drawing and other when there's a regular drawing. In today's session, we'll be learning the computation of irregular drawings, how to calculate interest on it. Now, the example is during the year ended 31st March 2021, a partner has withdrawn as follows. On these different dates, on 1st May, 1st July, 1st October, 1st January, and 31st March, he has withdrawn different amounts. You find that the drawings, the date as well as the amount are not regular. So this is a case of irregular drawing. Interest on drawings is to be charged at the rate of 10% per annum. So the rate has been specified as 10%. Calculate interest on drawings to be charged from the partner. Now there are two methods and both the methods are going to be discussed. First is a simple method. Second one is the product method. So first let us solve using the simple method. For that we prepare a table like this with 4 columns. Date, amount. So the dates of drawings and the amount which has been withdrawn have been filled in here. You have 2 additional columns. One, number of months up to 31st March of 2020. That is till the end of that particular accounting year. And the fourth column is for calculation of the interest at the rate of 10% per annum. Now let us start with the calculation. Now if you look at this, when was it withdrawn? First drawing of 4,000 was on 1st May 2020. Now we have to calculate the number of months from 1st May 2020 till 31st of March 2021. So if you calculate it, you find that it comes to 11 months. Only the April month is to be excluded from the 12-month period. So it was withdrawn on 1st May. So from 1st May to 31st March, 11. We go to the next drawing. It was made on 1st July. So calculate the period from 1st July to 31st March. So 1st July. So July month, August, September, October, November, December, January, February, March. It comes to 9 months. It was outstanding. The next is on 1st October, withdrawal of 10,000. So from 1st October till 31st March, calculate the period. October, November, December, January, February, March. So it is for 6 months. Next, withdrawal of 4,000 on 1st January. So January, February, March, 3 months. Finally, the last withdrawal of 6,000 was made on 31st March. So period from 31st March to 31st March is 0. It was withdrawn on the last day. So one important point that you have to remember is look at the dates. If it is 1st of that particular month, then that month is included. But if it was on 31st of May, then you would start from June computation. That is an area where silly mistake could be. Once we have calculated this months, we go ahead and calculate the interest of individual drawings. So how do we calculate? It would be as amount of drawings into rate of interest by 100 into 12 number of months for which it was outstanding by 12. So the same thing will apply here. The amount of drawing is 4,000 into rate is 10% into the period is out of 12 months it was outstanding for 11 months. So calculate this. You get this amount as 367. Further, next calculation, 6,000 into 10 by 100 into out of 12 months it was outstanding for 9 months. So 9 by 12. So calculate this too and you will find that it comes to 450. So the same way you can do the calculations for the rest. 10,000 is the amount of drawing into 10 by 100 into 6 by 12. It was outstanding for 6 months. So calculate that way. It comes to 500. And next one is 4,000 into 10 by 100 into 3 by 12. So calculate for this too. It comes to 100. For the last month, 6,000 into 10 by 100, but it is for 0 months. So it comes to 0. Now just total this up. It comes to 1417. 1,417 is the amount of interest on drawings which is to be charged by the firm from the partner in this example. So using the simple method, we calculate interest on drawings in this manner. The same example, let us apply the product method, which is the second method. So here also you have to create a table with 4 columns. Date, amount, number of months outstanding up to 31st March 2021, but last column changes. It is product column. So what do we do here? We take the product of the amount and multiply it by the number of months to get the product, and then we would calculate on that the amount of interest on drawings. So for the number of months it has been outstanding, again let us calculate. From 1st May till 31st March, it was 11 months. 1st July till 31st March, you remember it was 9 months. 1st October till 31st March. Calculate like this from October, November, December, January, February, March. So 6 months. So that way you would avoid making any mistake. Then 1st January till 31st March, 3 months. And the last on 31st March, 6,000, so 0. Now we find the product. Product is nothing but column B into C. That is amount which has been withdrawn into the number of months for which it was outstanding. So 4,000 into 11 would give you 44,000. Then 6,000 into 9, say 54,000. 10,000 into 6, 60,000. 4,000 into 3, 12,000. 6,000 into 0, 0. Now total this up. That would be the total of the products. That comes to 1,70,000. Once having got the product, now we would apply a formula. The formula is we take the product, we multiply it by the rate of interest of drawing by 100 into 1 by 12. So we calculate interest for 1 month. Why are we doing it here for 1 month? Because we have already incorporated the time factor by calculating the product. That is why when we are taking this product, we calculate the interest on drawings for 1 month. So now as per this formula, the amount of total of the product is 1,70,000 multiplied by the rate of interest, which was 10%, and we calculate it for 1. So do the calculations and you will find that it would come to 1,417. So this way we can calculate interest on drawings for irregular drawings under the simple method or the product. And you can see that it comes to the same amount. So these are the two methods for calculation of interest on irregular drawings. That's it, my friends. I'll be back with my next video on interest on drawings when the drawings are regular soon. So please stay tuned. If you found this video useful, please do like, share and subscribe to it. And yes, please click on the bell button to get the notifications of my upcoming videos on my channel. Thank you. Have a great day.